let's shift focus back to earnings. You've got Nestle as well as Unilever both set to declare their numbers. So let me take it across to Kaustubh Pawaskar, Senior Research Analyst, FMCG at Sharekhan, joining in on the show right now. Kaustubh, hi, good morning. Help us understand operationally what's your expectation from HUL as well as Nestle?
Good morning. So for the FMCG pack, if we consider, we are expecting, a double-digit revenue growth, largely led by the, improvement in the sales volume. In the terms of margins, the margins are expected to be lower. The obvious reason is because of the increase in the commodity prices. So starting with HUL, we are expecting around 11% growth in the revenues to 12,741 crores. We are expecting domestic volume growth to be around 6 to 7%. Both home care and personal care are expected to grow at around 10 to 11%. Also, the foods business with nutrition business scaling up, we are expecting around 12 to 13% growth in the foods business. In terms of the operating margins, we are expecting operating margins to be lower by 90 basis to 24.2%, and we are expecting PAT to grow by around 5% to around 2,167 crores. So as I said that at revenues level, the growth would be in double digit. However, because of the expected decline in the margins, the PAT growth would be around 5% for each year. In terms of Nestle, we are expecting revenues to grow by around 10%, largely driven by a volume-led growth. Volume growth is expected to be in high single digit for the domestic business. We are expecting Maggie and the chocolates business to grow in double digit. We are expecting recovery because of the recovery in the out-of-home consumption. I think the beverages should see a sequential improvement in revenues. However, for Nestle also, we are expecting around 50 basis points decline in the operating margins, and we are expecting a single-digit growth in PAT.
From the last quarter to now, the big change has been that raw material costs are clearly an added pressure for most industries and in particular for FMCG as well. What kind of commentary around that are you expecting, given that up until now there have been price hikes which have been undertaken across categories and they've been absorbed by consumers as well so far?
Right. After the quarter one results, most of the companies in their conference call were expecting that commodity pressure would ease out by second half of FY 2022. But as of now, we are seeing, the surge continues in most of the commodities, barring few like copra or, domestic tea prices, where the prices have declined from their high. But other commodities like crude linked derivatives or edible oils, there is a significant jump in the prices on YOY basis. So considering that, what kind of pricing actions the companies have taken, because the most of the companies have indicated that the price hike would be in the calibrated manner, so they would focus on improving their sales volume, and in that context, the price increases would be in the calibrated manner. So whether this strategy would continue in the coming quarters, and what is the anticipation in terms of the commodity price movement, because that is continually that is surging up. So whether the earlier stance was like the expectation was easing out of the commodity prices in the second half of the year, whether that stance still continues for most of the companies, that we need to understand from the current quarter's comment.
Kaustubh, just come in on the valuations as well, because I think this is one sector that a lot of people said during the second wave was not as badly impacted as in the first wave because people still consumed. How are they looking right now? Is there a re-rating that has happened, and what's the outlook from this point on?
See, valuation, if we look at from the valuation perspective, obviously the sector's valuation are currently at a premium, and we need to understand that FMCG was was relatively less impacted sector compared to the other sectors. So it was considered as the safest bet, and in that context, we have seen most of the companies recovering. If we consider first wave or second wave, the recovery was much faster. So maybe in the first, if we talk about first wave, from Q2 we started the recovery, but in the if we consider from the second wave perspective, I think the things were much more better, considering the supply and distribution, from supply and the distribution point of view. So considering that this sector recovery was much faster, rural came back on track. So in FY21 we have seen that most of the companies saw strong improvement in the rural growth, and that is expected to continue in the quarters ahead. And also with receding cases, I think urban recovery would be there, especially in the out of home categories. So I think the growth would continue. The revenue, we expect double digit kind of a revenue growth to sustain. Near term margins pressure will be there, but I think if we consider from the longer term view, the scale up in the margins would continue for the companies, considering the premiumization strategy, considering the supply efficiencies, what companies are focusing on to build on. So the earning growth visibility is there. Balance sheet are strong. So I think valuation will continue to remain firm. However, we have to be selective in the space, and considering our stance of selective companies, we like Britannia Industries, Godrej Consumer, Marico, and Tata Consumer Products in the large cap, and in the mid cap. We like companies like Indigo Paints, Radico Khaitan, where the room for earning growth is quite much high than what the other the peers in the company in the space is, and the valuations are relatively attractive compared to what the sector valuation is.
Understood. Kaustubh, thank you so much for joining in and for your perspective on the FMCG basket.